Market opens higher despite weak global cues. The Nifty remains well above the 24,100 mark, currently holding at around 24,200. Banking names, they outperform, they climb higher as the RBI has eased the LCR norms.
Shares of solar energy equipment manufacturing companies Premier Energies and Vari Energies have surged as much as 6% after the US has imposed anti-dumping duty on imports of solar equipment from 4 Southeast Asian countries: Malaysia, Cambodia, Thailand and Vietnam.
Shares of Hero MotoCorp and Bajaj Auto decline as Jefferies downgrades the stocks on expectations of lower sales volume. Bajaj Auto is downgraded to a hold rating with the target price cut to around 7,500 rupees from around 10,500 earlier. Hero MotoCorp is downgraded to underperform with the target price 3,200 rupees from around 5,000 rupees earlier.
Steel stocks like JSPL, Tata Steel, SAIL and JSW Steel are trading with modest gains as the government has imposed a 12% safeguard duty on imports. Brokerage Morgan Stanley says that this is a positive development as it removes multiple months of overhang around the imposition of safeguard duties on imports.
Cholamandalam Finance dips nearly 1% after CLSE downgrades the stock to hold with the target price at around 1,600 rupees a share, with expectations of growth tapering off. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Hormuz. Hormuz, well, we wake up to weak cues overnight, but the Nifty bulls, they are not having any of it. They are saying let the global markets do a thing of their own. The Indian markets have the momentum and the Nifty Bank, that's the one that's in rock solid form.
Absolutely, and continuing from where they left off yesterday, and the bulls kind of realized that that what happened overnight in the US is also mostly self-inflicted. So taking cue from that, and of course the recovery that we are seeing in the Dow futures as well earlier this morning is adding to the positive sentiment. Of course, the announcements made with regard to the LCR norms is also having a sentiment boost for the banking names. The Nifty Bank made a record high yesterday, is building on to those gains in today's trading session. At one point it even crossed levels of, now nearing levels of 56,000 now as we speak, just a few hundred, just 120 points away now, 600 points higher on the Nifty Bank. Another day of very, very strong gains in today's session. But what are the charts indicating for the road ahead? Shilpa Raut of Prabhudas Leeladhar is joining in for just that. Shilpa, good morning. Thank you for joining in. Well, it almost seems like the Nifty has taken a bit of a backseat right now because the Nifty Bank has been in the thick of things for the last 2 trading sessions. Where do you see the Nifty Bank now that we have already crossed the previous high? We crossed 55,000. Now we are nearing 56,000. And what about your stock recommendations for the morning?
Good morning, Nigel and Hormuz, and thank you for having me on the show. Talking about the indices, yes, we are seeing some solid short covering happening in the market, and we've seen that markets have already consolidated for months, and we've seen the price and the time correction both happening, and the bulls have got the much needed rest already. So Bank Nifty has taken that all-time highs, and now it's done for Nifty. Nifty, I guess, with a solid support at 22,800 in a positional view as well, you can stay long and look for targets of 24,600 to 24,800. And once it crosses that, then Nifty will also see new all-time highs happening there. Bank Nifty, we have a resistance at around 56,200. So already almost approaching that. So if we sustain 56,200, then definitely the levels of 57,500 also opens up. So Bank Nifty, some profit booking can happen at around 56,000 to 56,200.
Okay, all right, 56,000 to 56,200. That could be some profit taking that could creep in on the Nifty Bank. Got that. Shilpa, what about individual stocks? What's on your radar?
Nigel, I have 2 buys. The first one would be a buy in HDFC Life. HDFC Life trading at around 714. I believe it has given a good breakout and is sustaining above 700. From here, the levels of 760 to 785 levels should be the next target. So keep a stop loss at around 695 and stay long in HDFC Life. The other one would be a buy in Dalmia Bharat. Dalmia Bharat also witnessing good short covering. Levels of 2,000 to 2,030 should be the next targets, and keep a stop loss of 1,900.
All right, Shilpa, thank you so much for sparing time and joining us on the show with your views on the index and on specific stocks as well. Well, shifting focus then to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta is joining in today to talk about a stock that he is tracking very closely.
Hi, thanks. Today we have Cummins India, which leads the domestic power gen space with vast install base. Its focus on clean and emission compliant products aligned with India's regulatory shift, giving it an edge both in compliance and innovation. The company's strong balance sheet and cash reserves should act as a cushion during the market volatility. And moreover, the business is doing well in the recent months. In Q3 FY25, company delivered almost 22% growth in revenue, and mostly the demand for high horsepower engines, especially from the booming data center segment, has been a key driver. Domestic revenue grew by almost 18%, while exports surged by 43%. Looking ahead, Cummins is set to benefit from the implementation of the new emission norms, boosting overall demand in the construction and other segments in which it is operating. Its focus on clean energy and cost efficient take places it ahead of the peers. With regulatory tailwinds and product innovation, Cummins is building structural growth levers that are aligned with the India's energy transition. Valuation-wise, Cummins offers an attractive blend of earnings, visibility, and valuations. The company has guided double-digit growth in FY25 and FY26 probably, with Q4 expected to be better on the back of higher execution and higher demand for clean technologies.
Some ideas of profit there from Money Control Pro. Now, sources are telling CNBC-TV18 that the government is eyeing ways to restrict money laundering through online gaming platforms. Timsy is joining in with more details on this. Timsy.
Well, in a bid to ensure that the government is able to break the nexus of money laundering via online gaming platforms, sources have told CNBC-TV18 that the government is likely to consider some serious measures in this regard, which includes to propose mandatory registration of the online gaming platforms with the Financial Intelligence Unit. Sources in the know of the development shared with CNBC-TV18 that interministerial consultations are underway on mandating FIU registration for online gaming platforms, which includes discussions between the PMO, MHA, Revenue Department, MeitY, ED and CBDT, which have favoured for this mandatory FIU registration for the gaming platforms. Sources further say that with this move, the government aims that both onshore and offshore online gaming platforms will be easily scrutinized, and it will help the government to keep a tab on the funding and the source of funding that is coming or going out through these platforms. Sources also claimed that the government, if this proposal goes through, will be able to manage to book offshore gaming companies under PMLA in the case of violations. Meanwhile, an email query sent by CNBC-TV18 to Finance Ministry in this regards remains unanswered. Also, just to remind our viewers that the country's Financial Intelligence Unit operates under the aegis of Revenue Department under the Ministry of Finance and is responsible for collecting, analyzing and disseminating financial intelligence and suspected financial transactions. Now, to be seen is whether the proposal goes through or not, and whether this registration actually comes through the light of the day. Back to you.
Thanks a lot for that, Tim. See, for the time being, we slip into a short break. On the other side, we'll be joined by the management of IGI. They'll be discussing the past quarter's numbers. Don't go anywhere.
Back with us here on Chartbusters, on to earnings conversations. Then the company in focus is IGI, the International Gemological Institute. The company reported a 9.6% rise in its revenue from last year. Margins also expanded from last year. We have Temas Printer, who is joining in as the Managing Director and CEO of the company, and Ishwar Iyer, who is the CFO of the company as well. Gentlemen, good morning. Thank you so much for joining in, and congratulations on the quarter gone by as well. How do you 10% revenue growth for the first quarter? what kind of growth are you penciling in for the full year? And also a question on your realizations as well. We're down around 12% on the lab-grown diamonds certification pricing changes that have taken place.
Right.
So does this now become the new normal at around 950, 960 odd?
Yeah, it would be, and Ishwar can elaborate more. But on a year-on-year basis, it would be around 15 to 20%. That is what we are historically also done and striving for.
Okay, so you're saying realizations will hold around these levels, right?
That's right.
Right, and volume growth you're looking at for the year?
Volume growth is, at the moment, it is 26%
Yes.
or 27%.
Right.
And it's only, it'll only scale up.
Okay, all right. I just wanted, before we get into further details, lab-grown certification as a percentage of your total mix has come down to around 54% approximately. It was at around 60%. Is the need for testing going down?
No, let me just take that question.
Please.
I think what's happening as far as the lab-grown segment, the way it's evolving, at least for the India market, is that when this lab-grown business started, it was more in terms of stones getting certified. But and that's the story that we've been talking about in the past as well, in terms of the affordability factor that that provides, probably will enable the Indian consumers to come into the fray. Otherwise, this market was actually in the US.
Right.
So what we are seeing is a 5-6% increase in mix of lab-grown jewelry, which was 0% 12-15 months back, is now 5-6% of our revenues. So lab-grown jewelry typically will get consumed in the area in which it's manufactured, which is here in India. So we are seeing the trend that is at least indicating that the Indian consumers are now coming into the fray. And that is what is propelling the growth on the lab-grown jewelry side. So combined between lab-grown stones as well as lab-grown jewelry, the percentages have remained more or less the same.
At the time of your IPO, you had raised funds and you had mentioned that you're planning to complete the acquisition of IGI Belgium and IGI Netherlands as well. Where has that progressed to? Is this completed as of
we
now?
completed that in December itself because we had a specific timeline within which we had to complete the process. So we did the acquisition sometime in the last week of December.
And by when does it reflect on your books?
It's got reflected even in December quarter as well as for the quarter this year.
Okay, all right. So you started the year with a revenue growth of close to around 10%. That's in revenue terms, with obviously all the growth came in because of the volumes. Just to pencil in numbers for 2025, what kind of revenue growth are you looking at? How much of that will be volume led? And margins are holding steady at around this 64%, 65%.
Yeah, we actually declared a 57% margin last year. That's scaled up to 64. Obviously, the efficiencies, the way the business model is evolving in terms of the flow through that happens because of the volume and the revenue throughput getting into the bottom line. So that's what's driven the expansion from a margin standpoint. But again, to the point that you made in terms of we did take a pricing correction last year. April, May is when we took the pricing correction, consequent to the movement of the lab-grown segment itself. So we had to keep ourselves relevant in terms of the certification pricing, etc. And that's the reason we took that pricing last year. So from that context, the volume growth is therefore at a higher scale versus the revenue growth because we are cycling that pricing. But if you look at it from a sequential standpoint, I think the gap is insignificant. Actually, the revenue is growing faster than the volume growth, which we think should therefore pan out over the course of the next 3 quarters. So again, 15-20% is what we had committed at the beginning of the year as well. I think we should stick to those estimates for this year.
Revenue growth of 15 to 20%. Margins, as you mentioned, you'll have done various tweaks on the operational side, and that's why your margins have improved.
Yeah, between 57 and 64. I think we should look at it in that range because quarter one is too early for us to, because we're also making significant investments because as the volume throughput is really going up, we're also investing in capabilities, both in people, expanding laboratories, etc. So I think the investments are going in the right place. So I think between 57 and 64 is what I think therefore we should guide.
Very broad.
It is. To say that. Of course, it is.
No, but to add to what Ishwar is saying, lab-grown is a volume game. And we are ramping up our gemologists. We've already recruited 130 gemologists, which is 14% of our staff strength, to handle the volumes. Plus, we have taken AI into function.
Indeed.
And the other thing is that we have changed the product mix. We are getting more and more natural diamonds also. So, at IGI, we grade diamonds, and we give you the origin, whether it's earth mined or man-made.
Right. So if you could give me a number, what is the charges typically you all do on certification of lab grown and of natural diamonds? What should the number be, difference? The average we have 950.
Yeah.
But if you want to split it up for us.
Natural diamonds will be just over $40, and this is just under $20 for lab grown.
Okay. And natural diamond is stable.
Right.
It's rare.
Yeah.
It's unique. So, there on lab grown, it's a volume game.
Yeah.
So, so you get discounted on more the volume, more than, and the lab grown is actually increasing the consumer pie because of the affordability. Lab grown is not cheap.
Yeah.
It is more affordable as relative to natural.
What should your revenue mix look like? Going by all that you all said, lab grown is growing at a fast clip. On natural diamonds, you're not, you don't see any big downtick in the realizations. So that's holding steady, the average price. But what should the ideal revenue mix be for you all?
At the moment, between lab grown as well as lab grown jewelry, we are in the 55-60% range. I think that should hold as we get on during the course of the next 3 quarters.
But is natural emerging as a segment, because they're at 16.5, but you expect to go to 20 sometime at least by this year?
We were 18 last year. It's gone down to 16.5.
Yeah.
I think again cyclical between quarters. So I think we'll just look at it. I think it's early days, but between 16.5 to 18, I think that range is holding strong at the moment.
All right, gentlemen, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the quarters ahead.
Thank you very much.
Thank you so much.
Appreciate it.
Thank you,
Nigel.
There's the management there of International Gemological Institute on the quarter gone by, and of course to discuss the road ahead for the company as well. The stock doing well for itself today, 1.8% higher as we speak. Take a short break. More on the markets and specific stocks on the other side. The Nifty above the mark of 24,200. Stay tuned.
Welcome back. Well, some of these solar-related plays actually are doing very, very well. Just pull up a few of them. What's happened is the US, they have going to be putting duties on imports that are coming in from various parts of Southeast Asia. And India has the potential, to go ahead and in fact grab some market share on a global front. So that's why you have stocks like Waaree Energies. Just pull up the intraday chart out there. It's moved on very, very good volumes. I think a month or so ago, the stock was at around 2,000 rupees. And it's bounced back very, very well. So big uptick is what we're seeing. The other one we're looking at is Premier Energy. That one as well has moved up. So Waaree is the biggest beneficiary because they have a plant in the United States as well, and exports is relatively a larger part of their business. Premier Energy is another one that's moved up, and a smaller company is Insulation Energy. All these are into solar cells as well as solar modules, or they have plans to move into that particular space. So that's why you have all three of these stocks: Premier, Waaree, and Insulation Energy, all of them at the high point of the day.
Waaree is also reporting results today, so keep an eye out on that. And of course, despite Waaree being at around 2,200 or 2,300 odd, or around 25 as we speak, it's still significantly lower than its post-listing high, which is around about 3,700. So, but still positive developments for these stocks. At the highest point of the day now is Waaree, 6.5% higher, crossing the mark of 2,600. But two auto names that are on our radar today, and that is Bajaj Auto and Hero MotoCorp, and both of them have been downgraded by Jefferies, and their price targets have been cut as well. Sudarshan is here to tell us more on this. Sudarshan.
So stock reaction of the two-wheelers will tell you exactly what does the Jefferies note say. So Jefferies has downgraded Bajaj Auto and Hero MotoCorp and has maintained buy call on both TVS Motor and Eicher Motors. So first, for Bajaj Auto, it has been downgraded to hold, and target is cut to rupees 7,500 from earlier target of rupees 10,550. For Hero Moto, it's a double downgrade. It's been downgraded to underperform, and target has been cut to rupees 3,200 from almost 5,100. As far as Eicher Motor is concerned, here maintained buy call, target is raised to 6,700. For TVS, maintained buy and target is raised to 3,225. So why exactly Jefferies has downgraded these stocks? So first, it has cut two-wheeler industry volume growth estimates for FY 26-27 by 6 percentage point and 2 percentage point each, but it expects a healthy 10% CAGR over FY 25-28. Now, for Bajaj Auto and Hero, they have seen a sharper downgrade, and also estimates have been cut for Hero MotoCorp. EPS estimates have been cut in the range of 8 to 11%. For Bajaj Auto, it's been cut in the range of 5 to 7%. And the reason Jefferies has given, because it's both these companies have been reporting lower volumes in comparison to TVS Motor and Eicher Motor. For TVS Motor also, it has cut the EPS estimates, but lower volumes for TVS Motor have been partly offset by PLI benefits that the company has been receiving. For Eicher Motors, it's been one of the top performers. You can see in stock performance also, both TVS and Eicher Motor have been outperforming over the last 6 months, and it's been reflecting on the monthly numbers, quarterly numbers, and these are some of the reasons. That's the reason Jefferies has downgraded Bajaj Auto and Hero MotoCorp, and both the stocks are down in trade as well.
Okay, all right. Thanks a lot for that, Sud. Well, banks, though, are in focus after the RBI eased liquidity norms further. Abhishek joins in to help us understand this news point and what impact it has on the stocks. Abhishek?
Well, RBI has revised a liquidity coverage ratio framework. So they have put additional runoff rate at 2.5% to internet and mobile banking enabled retail and small, business customer deposits from the 5% that was in the proposed or draft norms. Funding from non-financing entities such as trust, that is educational trust, charitable trust and religious trust, partnerships and LLPs will attract a lower runoff rate at about 40% from the earlier 100%. So this augurs well with respect to, wholesale deposits flowing into the banking system. Now, Macquarie has written a note. They say that the impact from RBI relaxation would be that RBI expects a 600 basis point improvement in the LCR ratios for the banking system from the Q3 FY24 LCR levels. So they believe that this is encouraging and will provide support to the credit cycle of the lending institutions. So back of the envelope calculations does indicate that about 2.5 to 3 lakh crore increase will be seen in liquidity, which can be deployable. So this would imply a 140 to 160 basis point potential increase in credit growth for the banking system. Up on your chart for reference is the LCR of various banks in Q4 and Q3 FY25. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, on that note, though, we'll have a wrap up on this edition of Chartbusters. As we do that, here's some good news for all our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store. Or you can just scan the QR code that's up for you on the screen.